Banks, these establishments that we trust with our hard-earned cash, play a crucial role in our modern world. But have you ever wondered how exactly they function? How do these financial powerhouses generate profits and stay afloat themselves while helping us manage our money? Well, let's dive into the inner workings of banks and uncover the secrets of their revenue generation. At the most basic level, banks are businesses, and like any business, their primary goal is to make a profit. Now, when you deposit your money into a bank account, they don't simply stash it under the counter. Instead, they put it to work, primarily by lending it out to other individuals or businesses that need funds. This is the most significant source of income for banks. They charge an interest rate on the loan, which is higher than the interest rate they pay you on your deposit. The difference between these two rates is known as the net interest margin, which is one of the biggest components of a bank's profit. Imagine you deposit $100 into your bank account. They, in turn, lend that $100 to someone who wants to buy a new car, charging them an interest rate of, say, 5% per year. You, as the depositor, might receive an interest rate of 1% per year on your deposit. The bank keeps the difference, 4%, as their profit. Now, if they lend out many thousands or even millions of dollars, this percentage margin adds up quickly, creating substantial revenue for the bank. But banks don't just rely on this interest margin to turn a profit. They also generate income through various fees and services. Most banks offer a range of financial products and services that come with associated fees. For instance, some banks charge account maintenance fees if you don't maintain a minimum balance in your checking or savings account. There could be withdrawal or transfer charges, especially for wire transfers or international transactions. Overdraft fees are also common when you try to withdraw more money than you have in your account. Additionally, banks often offer credit cards, which come with annual fees or late payment charges. Banks also earn revenue through commissions on financial products, such as insurance or investment advisory services. These fees and commissions, while they may seem like supplementary income sources, contribute significantly to a bank's overall revenue, particularly in the current low interest rate environment. Another avenue through which banks generate income is by investing their depositors' money. Banks typically invest their funds in government bonds, which are considered very safe, or in financial markets to earn a return on their investments. They may also invest in business projects or real estate ventures, either directly or through loans or lines of credit. These investments, while carrying some level of risk, offer the potential for higher returns compared to simply holding on to cash. The income generated from these investments is another vital component of a bank's revenue stream, helping them to grow and expand their operations. In essence, banks act as intermediaries, connecting those who have money, such as individuals with savings accounts, to those who need money, such as individuals or businesses seeking loans, through interest margins, fees, and investments. Banks generate the revenue necessary to sustain their operations and provide the essential financial services we rely on. It's important to note that the banking industry is highly regulated to ensure stability and public trust. Government agencies such as the Federal Deposit Insurance Corporation in the United States provide deposit insurance, which protects customers' money up to certain limits, fostering confidence in the banking system. In conclusion, understanding how banks make money reveals the intricate mechanisms that drive our modern financial system. From interest margins on loans to fees on financial services and returns on investments, banks have diversified income sources. As we continue to rely on banks for our financial needs, it's crucial to have a grasp of how they operate and the factors that influence their profitability. So the next time you visit a bank or manage your finances online, remember the complex web of activities taking place behind the scenes to keep our economy running smoothly. Thank you for watching. If you enjoyed this video, please give it a thumbs up. And don't forget to subscribe for more informative content.